It's not actually too long since our last look at FMG. In fact, it was right on this bar here, and at the time we noted that most stocks related to iron ore did suffer some damage that session. As we can see here, quite a severe intraday sell-off, a low close as well, and from that juncture we have seen lower prices. On the positive side of things, a reasonable bounce, but again just starting to roll over. Nice high close there yesterday, but exactly the opposite today, a low close, and as we can see, volume has been increasing of late. And it doesn't mean too much at this stage, but we need to see that volume remain high if we are going to get one final probe to the downside, tag this diagonal line of support. That's the support running through here, and the ideal situation is to come down to there, get that high volume, but start to see some high closes just like yesterday, and that would give us some confidence that wave 2 or B is firmly in position. So we'll just take a look at those larger degree patterns from these lows, and the positive thing as always is that we've seen clean strong price action, so impulsive in nature. That unfolds in 5 waves, completes intermediate degree wave 1 or A, and the ideal situation is to see an ABC correction to the downside. Now it could be argued that we already have a pretty symmetrical corrective pattern in position, so A, B and a wave C. That's certainly feasible, and as we can see, this low down here coincided very nicely with the first time cycle. Remember, these time cycles were put forward during our last review. Not absolutely ideal. Usually we like to see a confluence, and in this instance obviously it spans a couple of months or so, but they have several projections on each of these time cycles, and the first one has proved to be significant, at least up to this juncture, just 1 day out from this low point. But I think having seen this deep corrective pattern down, it certainly exceeded the 61.8% retracement level of this prior leg higher, and whenever that happens we have to be alert to the possibility that a slightly more complex pattern is going to unfold. Now the ideal situation within wave C is to see a 5-wave movement down. That wouldn't be ideal in this instance because it would take us beneath this diagonal line of support. So what I'm looking for here in actual fact is less conventional 3-wave pattern down, so A, B and a wave C, taking us down toward that 460, 470 region, and if we do see some good demand returning at those lower levels, then it should be onwards and upwards from there. There is a slim chance that we do rotate all the way down to the typical retracement zone down here, but certainly with the information at hand, I suspect that is not going to be the way forward. Yes, we could tag this diagonal line of support, but I wouldn't be looking for a deeper correction than that at this stage. So right here and now, no reason to want to be involved. Really the trigger for long trade is this prior pivot high here. If that is overcome immediately, then all well and good, certainly go with it. But in my mind, I think we are going to get one final washout taking us down toward that 460 region, 470, and then look for possible buying opportunity following signs of strength at those slightly lower levels.